Global equities market edged higher today, while 10-year U.S. Treasury yields slid from 3% level as investors remain cautious, expecting the Federal Reserve to hike rates by most in a single day since 2000 to curb inflation. Investors expect the Fed to hike rates by half a percentage points today and to detail plans to reduce its $8.9 trillion balance sheet. The U.S. Central Bank raised its policy interest rates by 25 basis points in March. Major stocks indices in Europe rose, but Wall Street eked out small gains as traders brace for potentially more aggressive decision by policymakers today. MSCI's All-Country World Index rose 0.39% and Pan-European Stock 600 Index gained 0.53%. The day after a flash crash in Nordic markets caused by a trade involving a single Citigroup sell order. The Dow Jones Industrial Average closed up 0.2%. The S&P 500 gained 0.48%. The Nasdaq Composite added 0.22%. Well, the Federal Reserve today is expected to raise interest rates by half of a percentage point and announce the start of reductions to its $9 trillion balance sheet as U.S. central bankers intensify efforts to bring down high inflation. Federal policymakers have widely telegraphed a double-barreled decision that will lift the Fed's short-term target policy rate to a range between 0.75% and 1% and set in motion a plan to trim its portfolio of treasuries and mortgage-backed securities by as much as $75 billion a month. The policy statement is due to be released at 2 p.m. Eastern Daylight Time, which is 1800 GMT, following the end of the Fed's latest two-day meeting. Markets have priced in further rate increase through this year and into next, including at least a couple more half percentage points hike, as traders bet the central bank moves much more quickly than it had anticipated it would in March to get borrowing costs up to where they will start actively curbing inflation. With no fresh Fed's economic or policy rates projection due until central bank's June meeting, most clues on how far and how fast it is prepared to go will come from Fed's chair Jerome Powell's news conference. The Fed began its current round of policy tightening in mid-March with a quarter percentage points rate hike, smaller than many policymakers had wanted, given inflation had hit a 40-year high, but calibrated so as not to inject more uncertainty into global markets roiled by Russia's February 24th invasion of Ukraine. Elon Musk in his latest move says Twitter might charge a slight fee for commercial and government users, part of the billionaire's entrepreneurs' push to grow revenue, which has lagged behind larger rivals like Meta Platforms Incorporated Facebook. Last week, there were reports that Elon Musk told banks he would develop new ways to monetize tweets and crack down on executive pay to slash costs at the social media platform company. Elon Musk also told the banks he plans to develop features to grow business revenue, including new ways to make money out of tweets that contain important information or go viral. In tweets, which were subsequently deleted, Elon Musk suggested changes to Twitter Blue premium subscription service, including slashing its price, banning advertising, and giving an option to pay in the cryptocurrency Dogecoin. Well, oil prices in the international market rose at the start of Asian trade today after industry data showed drawdowns in U.S. crude and fuel stockpiles, raising supply concerns and offsetting worries about slowing demand from top importers China. U.S. West Texas Intermediate crude recorded a price surge of 1.52% to hit $104 per barrel. Brent sells at $106.40, registering an upward price margin of 1.38%. Bonny Light performance has lost some steam with a price drop of 2.34%, selling at $107 per barrel. For the OPEC basket, crude dealers offer $105.30, recording a 0.01% uptick in price.